Good morning, everybody. Welcome to our webinar here. My name is Jim Cotney, National Sales Director here at Western Marketing. First of all, before we get into anything, before I introduce you to our guest presenter, I want to thank you for spending time here on the webinar. We couldn't do this without you, so we really appreciate it and hope you'll learn some good tidbits about our presenting company and their products. With that said, we are here for you. Those of you who have done business for a while with Western Marketing know that we're very heavy agent focused. So if you have questions, please type them into the question box. I'm sure Kurt's going to do a great job, but if you have a question, ask it, and just know that if it's more on a one-on-one type of scenario, we'll probably call you after the webinar is over to answer that. Other than that, we really expect this to be an informative, great webinar with Kurt Hirschka from GILICO. He's the Vice President of Relations Account Manager there. And so, Kurt, welcome.
Jim, I appreciate it, and the Western Marketing team appreciate it as well. I always enjoy connecting on a webinar front with our partners, and I think it just always can bring some good highlight back to the wonderful services you're providing to your advisors, and then where we can kind of come in as a carrier and just complement what you guys are already doing well. So hopefully you're seeing my slides there. I look forward to introducing myself a little bit more, but giving the kind of the who is GILICO, right? As I know, just from experience, I'm newer to the partnership with Western Marketing myself, but I know GILICO's been partnered for a few years, and I'm just looking forward to learning more about the group as the year goes on here. But for those of you who are new to GILICO, hopefully I can provide some information here for you. And if you are familiar with GILICO and you've written our annuities, I just personally want to thank you for that opportunity to work with you and your clients as well. As you see titled on the slide there, who is GILICO? I'll get into that a little bit. We do offer, amongst all the great offerings that Western Marketing presents to you as a resource for your clients' needs. We'll give you a very competitive fixed index annuity. It's our flagship product. I'll go over here, centered around some concepts, conversations that may come up where you may see a good fit for it. It's called our Wealth Choice. And then we do offer a multi-year guaranteed annuity, or a MIGA as well, where we've got a nice niche story that may come in handy for you. But centered around all the product offerings we have for you, guarantees with simplicity and flexibility. You see that in green there, and hopefully that resonates as we kind of go through some of the products here, but as well as hopefully the ease of working with us as well. As Jim mentioned, my name is Kurt Hirschka, external wholesaler here, account manager, VP of relations, all the titles. And again, I'm very blessed and thankful to work with a great growing company like GILICO. My contact information is there as well. However, I'll always point you in the direction first, getting connected to Jim and his team there at Western Marketing. When you do have questions, think of me as just another resource. If Jim needs something done, or has questions within GILICO, I'm just a resource there. But if he's tough to get a hold of, we have a sales team that you can call as well for quick questions as well. But disclaimer slides for compliance purposes, just to make them happy. We all know fixed index annuities, they track the market, but they're not tied to the market, right? So that's basically what that's saying. Now let's get into a little bit of the meat and potatoes here. So who is GILICO? So you'll see on the left-hand side, GILICO, or Guaranteed Income Life Insurance Company, was established in 1926. So going on about 100 years old, 99 years. Home offices in Baton Rouge, Louisiana. Primarily, we were a MIGA shop in the state of Louisiana for the longest time. So if you're familiar with GILICO, maybe there's a chance you live out that way, and you've seen and used us in the past. Couvert came and purchased GILICO, a private holding company, which also has a very unique and cool story behind it. Back in 2016, so about 8 going on 9 years of our relationship with them, they also purchased United Life, which is our sister company, the same exact product offerings, just within our bank financial institutions channel, as well as we have a reinsurance arm. You know, we can build products for other carriers, so on and so forth too. So there's a lot of cool things going on within Kuvare. But why I'm thankful we work with GILICO is we've really grown organically and conservatively here within the fixed index annuity market, especially over the last 8-ish years. You'll see that we reaffirmed our A- rating here in November, so very excited about that and very thankful. And then if you look over on the right-hand side under direct premiums, we did about 3.3 billion in fixed index annuity sales last year in the independent channel alone. And we hope that, and we know that will continue to grow. We offer one fixed index annuity product currently to Western Marketing and our flagship accounts. And really, I take solitude in that, and where we can find some good reassurances that is we're going to be as competitive as we can, because 99% of our partnerships, right, have access to one fixed index annuity. So as we get into some of the product details of that, I think there's some good reassurance that it's going to be a solid performing product, new business, but as well as business that's coming up on anniversary. We know we've got a reputation here. We're having fun with holding. So if you got questions more on our financial backing or anything of that nature, feel free to reach out to Jim and the team there. We have some financial brochures that we can share with everybody. So as any groups that I work with, I tend to find that there's really two sides of the coin here with the types of advisors, whether it's the first time writing annuity and they're very excited but maybe nervous because they're newer to the industry, or maybe there's some cross-sale opportunities here, as well as there's going to be veterans that have probably used annuities and fixed index annuities for 20 years. There's always just questions that I feel like if I was an advisor, maybe that I'm hearing, especially in the volatility of the market that we have today, right? So a lot of fear, if we want to call it that, uncertainty, especially if we're watching the news or if you're tracking anything in the market that can give us in the industry, you know, maybe some concern of what our clients are thinking, and then obviously they're going through it, they're experiencing it, and how do we protect our money as much as possible, but as well as not just have a nothing return for the year if at all possible. And that's where I feel like annuities can kind of come in and be a great resource, right? So top line there, top sentence, I have clients looking for guaranteed and conservative returns. Imagine if we're hearing this is, you know, we're also hearing that, hey, I've got money in savings, you know, I'm looking at some bonds, some CDs, of, you know, anything of that nature. This is where we can offer a multi-year guaranteed annuity or a MIGA. I'll get into what our offering looks like. And then you also may have the client's second sentence there. I have clients looking for moderate growth without the ability to lose money. Great, annuities can do that. And they also want access to their money, maybe on the liquidity side of things. They want that moderate growth. You may hear that they've got money currently sitting in the market, or they're kicking around the idea of a SPIA. So anytime we're hearing that, that's when I think a fixed index annuity can also come in conversation, and where maybe considering our wealth choice might be a good product offering. So very quick, our multi-year guarantee, this is where I'm going to really start to sound like a rate jockey. I feel like, you know, obviously we're going to talk about some context, which is great, and some scenarios, but ultimately just highlighting where GILICO's indexed annuities and fixed annuities can win. You're going to hear a lot of rate conversations. So if there's questions you have, or you want access to some of these rate sheets, feel free to reach out to the Western Marketing team. But our guarantee rate lock, which I know some of you have written, our GRL, we offer a 3-year through a 10-year that you see there on the rate sheet. Really our niche, and what I want to highlight, maybe where our MIGA, contrary to other MIGAs out there, generally speaking, right, most MIGAs are really one and the same. We just want that guaranteed rate that the client knows that they're going to get for those 3 through 10 years that they're in the contract, right? Our niche, if you'll see there on the second column, is roll right up to age, or through age 100 on our 3, 4, and 5 years. So not a lot of carriers play in that space. We always like to kind of make the joke or crack the joke of we're down with OPP. If you know 90s music whatsoever, we refer to that as old people premium. But we will be a solution and opportunity for the fixed annuity side of things to work with some of your clients that are maybe being forced to annuitize at 90 with the product that they're in, or they're healthy and they just like the idea of maybe getting more of a return, longer term return than maybe what a CD or something like that may be offering. And so always like to highlight that on our MIGA as kind of an area we can be a good solution for. Next, getting into our fixed indexed annuity, as again, if there's more variation between fixed annuity or indexed annuity, it's usually within the indexed annuity. A lot of your colleagues have complimented GILICO on, and what we've done a good job of, like I said, this is the one fixed indexed annuity that we have offered to all of our partnerships, is our wealth choice is going to be strong in both growth and income. Generally speaking, you're going to run into products out there, and it's just how they're built, where one may be very competitive in growth, meaning they give you really good competitive cap rates, fixed rates, participation rates, some different indexes to strategize and allocate to, but they may limit themselves on the liquidity aspects of it, whether that is an income rider or penalty-free withdrawals, ADL doubler, so on and so forth. Or contrary to that, they're going to be a fixed index annuity used more for income, meaning they've got strong payoff factors, really good for lifetime guaranteed income, or else competitive penalty-free withdrawal features, ADL doublers, and so on. But they may not be as competitive on the accumulation side of things. GILICO is going to really give you the best of both worlds. I like to look at it a little bit as a Swiss Army knife. So as we go through the build-up and the makeups of how and where wealth choice may be positioned, just know that there is maybe a scenario in both stories, or any scenario you might run into. Wealth choice may, not saying it will be, may be a good solution for what your client's trying to accomplish. So as we get into the accumulation side of here first, as we know, fixed index annuities are a great resource or tool for tax deferred growth. We can participate in the market upsides, and then we have protection from the market downturns. Again, I think every year is a good year to sell a fixed index annuity or position a fixed index annuity, but I think especially this year, that third kind of check mark or bullet point is a great conversation to be had. And I know you're doing this already, but this just, I think, validates also the where an FIA can come in on a holistic wealth planning side of things, right? And then reliability. So we're going to talk about some of the guarantees that wealth choice does come with, strong renewal rate integrity, as well as just some eject buttons or bailout features that it may have depending on performance or what your clients are looking for. As we go through our rate sheet here, which will be the next slide, you're going to see certain things highlighted that I just want to touch on. Again, go into the simplicity of the product and guarantees this product offers. You're going to see a very high first-year fixed rate that we like the story around currently, but also built into that, it's got a guaranteed lifetime minimum for the contract of 2.85%, which is a strong minimum to especially lean into, because who knows 5 years from now, 6 years from now, where new business rates may be. We might find 2.85% is as competitive as anything out there, but fixed index annuities obviously can offer more upsides. And then we're going to give you a guaranteed cap rate on our S&P 500 dynamic intraday TCA index. We're going to give you a guaranteed participation rate for the global quality index. So those are guaranteed for the term of the contract, and you don't need to be allocated into them, which is great. We'll also give you a performance trigger, which we like the story on, as well as some bailout features to go with it. So again, I'll make sure Western Marketing has access to this rate sheet that they can share with you. But here are our current rates. You're going to see that first line there is our first year fixed rate. So our 5 year, you can get 8% first year return guaranteed. 7 year, you can get 9%. And then 10 year with our 10% premium bonus currently has a 4% fixed rate. And then you're going to see a 10 year no bonus. You can get a 10% fixed rate. So again, with the way that the market and volatility has been, if there are some fears, let's lead with the conversation of, hey, if the market's going to have a down year this year, overall, when we factor in all, 4-ish months so far that we've had, we might come to that conclusion, or the media may get us to think that way. And if that is the truth, and we want to provide some opportunity and options for our clients to get a return, let's have a first year fixed rate where we can say, hey, you can get 10% guaranteed year one, whether that is us trying to, we can cover some of the, maybe this is a replacement, we want to make up what you're potentially losing on surrender throughout that first year. 10% fixed rate, awesome. If you want to say, hey, you just want a 10% guaranteed rate, can the market give you that today? Maybe the general thought is no. Well, let's get it here within a fixed index annuity. Again, those first year rates are great stories, or whether we're looking at selling a MIGA or a fixed annuity or a fixed index annuity, it's a great story. And then year two, we are transparent. That is a first year rate. It will not renew at those rates that you see here. Most fixed index annuities, fixed rates that are this high won't renew, close to what that new business rate is. But where we take pride is that our cap rates tied to the S&P 500 or the dynamic intraday and so on underneath the fixed rate, those have had perfect renewal rate history with us so far. The product's been in the industry for 5 years. We don't guarantee like the S&P 500 traditional cap, but it is in our best interest, right, as a carrier to maintain that the best that we can. And we've had a great track record so far. We have a renewal piece we can share with you all as well. But first year, let's get a guaranteed return. Then year two, when we feel like the market is bouncing back, let's get back into the exposure to the S&P 500 or allocate 50-50 or 33-34 with some exposure back into the market. And if that's the case, then you can see our cap rates on the traditional S&P 500 on there. Those have a bailout feature as well. We'll get into participation rates, competitive trigger rates, and then you're going to see the Barclays Global Quality Index. That's a volatility index. Don't see a lot in, but we do offer a nice guaranteed participation rate in. And then a lot of excitement around the S&P 500 Dynamic Intraday TCA Index because of how heavily correlated it is to the performance of the S&P 500. And most important takeaways, it does give you a guaranteed cap rate for the term of the contract. So that 13% you're seeing there on the 7 year, that is contractually guaranteed for the 7 years of clients in that contract, regardless if they're allocated to that index or not. They're going to have that to always lean back into. We'll speak to that at a very high level, because we could spend some time getting into the inner workings. If you were to ask myself, or if I were to take a poll of all of you on the call, how many of us like the volatility controls on fixed index annuities? Generally speaking, I get mixed answers, and that's very fair, right? It's one thing when a volatility control doesn't work. It's another thing when we can't explain why it didn't work. And the reason that I think some advisors have trouble explaining how volatility controls work is there's a lot of moving parts. The S&P 500 Dynamic Intraday Index, why we like it on a high level, is it gives you the index tracks really one asset class, and that's the S&P 500. Then outside of that, it's got a cash overlay. So instead of having 150 asset classes with back-tested data of how this volatility control may have performed 10 years ago with today's market, really all we have to pay attention to is what has the performance of the S&P 500 been. And to keep it simple, because it's made up of only the S&P 500 in cash, with its volatility target of 15%, it does what we see about 85 to 90% of what the S&P 500 does. So I'll use this year as an example. S&P 500 overall hasn't been terrible, right? It is a little negative. If we take only the last 4 months, right, it looks way worse. But if we factor in January, it kind of did climb up a little bit or helps save some of the performance for the year. Same with this TCA index. Not looking great right now, but that's because the S&P 500 has been down. When S&P 500 is up, we see this does about 85 to 90% of what the S&P 500 does. biggest takeaway is how we have this priced on our end, we can guarantee that cap rate. So again, guarantee cap rate tied to the dynamic intraday index. If you'd like more material on the S&P 500 dynamic intraday 15% index, we have some GILICO branded pieces we're more than happy to share with you through your partnership at Western Marketing, or you can go on spglobal.com as well to find some resources there. Next, the Barclays Global Quality Index. Why we like this is it does give you some international exposure to bonds and stocks. So not a bad index to blend with, especially when the S&P 500, like we're experiencing, may be having a little bit of a turbulent year. This does give us exposure to equities and bonds of, Japanese funds, European funds, but as well as U.S. commodities to go with it as well. It is a 5% volatility index. It is one of those volatility indexes with 140 different asset classes. However, if the S&P 500 is up, I'm going to lean more to the TCA index, but if the S&P is struggling a little bit, having some global exposure is not a bad thing. And if you want to feel like you're diversifying your client's portfolio, the Barclays has a good name to it, and it's got a guaranteed participation rate tied to it as well. So contractually, those participation rates you see on our rate sheet will not go down as well from anniversary to anniversary. Next is the trigger rate. I like this conversation, especially for clients who or advisors who maybe this is their first time trying to sell a fixed index annuity. Outside of a fixed rate, which obviously is that guaranteed rate for that year, the trigger rate is about as easy of a story that I feel like there could be in trying to get comfortable with fixed index annuities, or if you're familiar with fixed index annuities, right, just being able to offer another strategy tied to the S&P 500. If the S&P 500 from any given year over a 12-month period performs at 0 or any amount over 0, so it could be a 0.5% return for the year, your client's going to get what that trigger rate is. And on our 10-year, if the S&P 500, let's just say, was up 2% for the year, they hit our trigger, and your client's going to get the 6.7% return that the contract says it's at. If the S&P 500 is negative, then you get a 0, like all the allocations that a fixed index annuity generally will give you. So I like that story. Obviously, if you have other questions, feel free to chime in and ask, or you can reach out to your Western Marketing team for maybe some more clarification. And then the bailout feature. This is a nice feature we just build into the product that hopefully gives your clients some peace of mind, but as well as you as the advisor some peace of mind. It's not a feature you need to allocate into. It is just a benefit we build into the product. So on our 10-year, for example, 6.5% bailout feature, all that means is it's kind of like an eject button. If the market doomsday scenario were to drop, where you're noticing a lot of carriers are really starting to have to cut rates or potentially even get out of business, right? Not hoping we get there, but we do give you that nice feature where if we ever take our cap rate from where it's at 8.5, excuse me, on our 10-year product, and at renewal, you notice it ever renews lower than 6.5, you can walk away, your client can walk away from the contract surrender penalty free. Again, what we don't want you to think is that we're going to drop our rates on renewals. That's not our goal or intention. But as we're getting more into the broker-dealer space, we wanted to build in more guarantees. It's been a nice story for us to add. Hey, we're going to give you a high fixed rate year 1. We'll also give you some guaranteed cap rates to go into year 2 and beyond. And if you're looking for a floor, we'll give you some flexibility of ways out tied to a bailout feature or a return of premium feature. But again, if you have additional questions on how a bailout works, I think it's a great talking point to the wealth choice, and can provide some options or some reassurance to your clients as well. Other features with the wealth choice, it's got a 10% penalty-free withdrawal liquidity feature year 1. So 30 days after it's issued, your clients could get access to 10% of what their account value is penalty-free. It does come with a built-in terminal illness and nursing home confinement waiver. great feature if you've got clients asking about some of those benefits. We'll get into our optional guaranteed living benefit rider next, but that's our income rider. I'll talk about where we're competitive there. And then we have an enhanced death benefit option for the beneficiary. If they are willing to take payments of the benefit, the death benefit over a 5-year period, we'll pay that out of the equivalent of 110% of what that death benefit would have been. So a nice feature that's just optional for the clients. Like I mentioned, 5-year return of premium. If the client wants all their money back after 5 years, their initial premium back minus any withdrawals, they're not, they don't have to stay within the contract for the other remaining 5 years. For example, on the 10-year, they're able to waive the return on that return of premium. Competitive fixed rate, and it is RMD friendly. And that's really what I wanted to highlight on a whole on the accumulation side. And obviously, if there's any questions, feel free to chime in. Next, like I mentioned, we're going to get into the income portion of the wealth choice and where it's competitive. Again, generally speaking, most products are either very competitive in one area or the other. We're going to give you the opportunity to be competitive in both. The simplicity tied to where wealth choice is income rider is going to be most competitive is tied to our payout factors, and then we can start this in 30 days after it issues, or in essence, an immediate income rider. And we're happy we're able to keep that income rider fee under 1%, so 95 basis points for the expense or the fee. What terms does the income rider come on? Our 7 and our 10-year. Again, the 5-year is only for accumulation. We can issue the income rider through the age of 80. So the day before they turn 81, if this issues, they can get the income rider. We can exercise the income rider as early as age 50. And then we'll offer you very competitive payouts for joint, and then competitive payouts for single. But contrary to a lot of products also, our niche is we don't reduce our payout factors regardless if we're quoting a single individual payout or a joint payout. So that's where we're going to be competitive. And going to the simplicity of our product, really what we do is we look at what the account value is at the time. We don't have a benefit base like some income products out there. We don't like the idea of having to explain this phantom bucket of money where fees are being taken out of, but your income rider is valued from, but it's not what the death benefit is, and so on and so forth. We keep it very simple. The time the client's looking to turn income on, we take a look at the account value. We multiply the appropriate payout factor associated to their age, which here's just a snapshot of 50, 60, 65, 75, and 80, times that account value, and then that's what their payout is going to be. And then on the right-hand side, that last column, that's our increasing payout factors. So I'll get into how our increasing income rider works. Again, we keep it very simple, but we're going to be very competitive on the level. You know, North Star 65-year-old, for example, we have a starting payout factor of 7%, which puts us towards the top of the industry on immediate joint income, which we have a good story for. So here's an example. Well, I guess before I get into the examples, I always love to highlight this article that Fidelity came out with. It just goes into the importance of everything that you're doing as financial advisors, holistically looking at your client's situation, especially when income is coming into play. We're factoring in Social Security, other investments, other retirement accounts they may have. On average, a couple, both age 65, at least one of them is going to live to 93. That's nearly 30 years on average. Products that we're looking at putting clients in now need to be a good resource for if we're talking income, right? And we think Wealth Choice can position ourselves for an easy sale, but as well as a very reliable sale for your clients as well. So to keep things simple, here's just an example of an individual payout factor on a single. You're going to get the gist after one or two of these examples, but the initial premium going in is $250,000. Rob on the right-hand side is age 67, so the payout factor on a 67-year-old is 7.2%. His annual guaranteed living benefit rider or income rider for life is $18,000 annually for the year. That is even after the account value goes to zero. Rob is still going to, and he's still alive, Rob is still going to receive that $18,000 until he were to pass away. Joint income rider, really the same, but what we do is we look at the younger spouse's age, and that's the payout factor we work from. So again, $250,000 is what's going in. 65 years old is Mary's age. Again, Rob is 67, so we'll work off Mary's age of 65 years old. That payout factor for a 65-year-old is 7%. $250,000 times 7% is $17,500 for a joint income rider that pays on both of their lives until the second were to pass, or the survivor were to pass. So let's just say, statistically speaking, Rob passes away 20 years after the income rider has been turned on. Mary still gets that benefit, no reduction in that benefit whatsoever, whether it's qualified money or non-qualified money. The joint income rider is going to pay that value out for the rest of their life. Again, the older someone is, the higher their payout factor is, the more money that they would have. But we're positioned very competitively, especially around the 62 to 72 age range. If you are running into some immediate income riders, whether they're first-time incomes or replacements, we feel like we have a good product for you. Here's an example of increasing. Like I said, we try to keep it simple relative to what else is out there in the industry. Again, we factor the payout factor off of the youngest spouse's age. So how our increasing income rider works is, think of it a little bit as an inflation protection, if you will. So average inflation, depending on the reports you see, could be anywhere from 2.5% on average to 3% each year to factor in. Our increasing option has an annual guaranteed step up every year of 3%. So it has a lower starting payout factor, as you'll notice. At 65 years old, the level payout factor is 7%. On the increasing, it's 4.8%. So 250,000 times the 4.8%, you're going to see that that income rider is going to start to annually go up 3% each year. So 12,360 for the first year. The next year it goes up about $350, and then that 3% does start to add up and compound as we're used to. So where we see the increasing in the levels start to balance out or get to the same is about year 12 or 13. And then about year 15 or 16, we notice that the clients would have earned more throughout those first 15-ish years of the contract if they would have done increasing. So that increasing 3% step up, that happens every year until the second of the spouses were to pass away or their survivor. So if you got further questions on how our income rider works on the increasing side, feel free to reach out to Western Marketing and myself, happy to help. Here's an example of using our fixed rate, looking at the 1-year deferred income space that's becoming popular as well. We can, let's just say 10% fixed rate year one on our 10-year product. We defer income for that first year, meaning we're going to turn the income on the 13th month of the contract or the start of the second year. Initial premium here is $250,000. We get a 10% return with that fixed rate. So 250 times 10%, obviously $25,000 being added to the additional premium. Our 66 years of age payout factor jumps from 7% to 7.1%. So $275,000 the start of year 2 with that guaranteed 10% return times the increase in new payout factor of 7.1%. Our new joint income on both of their lives is now $19,525, which is a competitive story with other deferred income products out there too. So it's been a popular story. If we can use that fixed rate a little bit as a premium bonus, and the clients can wait a year, we can significantly, to a degree, increase their income if they defer 1 year with those fixed rates that you see there. Last thing I want to touch on our income rider is this idea about mitigating sequence of return risk, right? If we were to think about income riders or taking money from products that are maybe exposed to the performance of the market, whether that is the market itself, some variable type annuities whatsoever. If we don't have a guaranteed floor of 0 like fixed index annuities have, and we're withdrawing money, from the account balance, anytime we look to take income, we're just ultimately reducing what our account balance is, therefore the death benefit potentially. So on the right-hand side, you're going to see what a product that gives you both the ability to have potentially double-digit growth, but as well as a competitive income rider, the ability to pull penalty-free withdrawal, how the combination of the two can keep the account balance still alive, if you will. So if we look at option A here, you're going to see year one, there was a 10% return. And then there was also the withdrawal of 75,000 off of our initial premium of 100,000. We actually come ahead, right? And if you were to really work that down, again, these are just sample numbers that are being used. You'll see even year 15, because we've had some growth in the first few years, we still have a $52,000 hypothetical account balance where, God forbid, if we were to pass away, right, now we could leave that behind to a beneficiary. Contrary to that, if we're in a product option B where there is no protection against downside performance, we're not getting a return, or maybe the cap rates or the fixed rates aren't as high, you'll see in year 12, we've already reduced the account value to 0. Again, every client situation is going to be different, but if they love the idea of some ability to get access to the money in the form of an income rider or penalty-free withdrawal, but they also would love the idea of leaving behind a death benefit for a beneficiary 12, 10, 15 years later, a product like Wealth Choice may be a good solution for the client to consider based on its ability to have strong cap rates to earn money, but as well as competitive payout factors. But with all that, last thing I'll cover is, something to also ask your Western marketing team about is we do have a carrier incentive tied to premium. Relatively speaking, from what I hear, easier bogeys, if you will, to hit, but we will pay additional commission out of 50 basis points, for example, once you hit $1 million in issued business with us, and that climbs in a tiered approach all the way up to 3 million, which you can earn an additional 1%. This is a grandfather products or program, so hypothetically you qualify for it here in 2025. You will start 2026 earning that additional commission on top of regular commission. And with all that, if there are any questions in the chat box or anybody wants to unmute themselves, I'm happy to take anything generically. But if there aren't any questions or you would sooner reach out to your team at Western Marketing on one-on-one, please do that as well. But I appreciate everybody's time, and Jim, and I appreciate the opportunity to spend here with your guys as well.
All right, thank you, Kurt. Yeah, we do have a couple questions. One was somebody joined a little late and asked if this webinar is being recorded. It is. So if you registered and either attended, or we are even sending this out to people who did not attend. Quick disclaimer: not all products are available in all states, and rates are subject to change without notice. That's my little compliance spiel. So if something's different, please check right before you write your client a policy. But we love GILICO. We really like our partnership with Kurt, and we're looking to continually grow our business with them. The second question is, do you have immediate annuities with similar payouts? So Kurt, I don't know if you want to try and answer that. One, I think that was Tim. So Tim, let me know if you mean with similar payouts to like the income rider payouts, or what are you asking similar payouts to? Kurt, give me 1 second to see if Tim responds here. It's probably the same. It's probably what I assume, income payouts and payout factors, but he has not responded. So
yeah,
do you want to just jump on that one?
Yeah, no worries. And sometimes when I hear immediate, maybe I think of more like a SPIA or something of that nature that can come up. So it's a great question. The way that we would utilize any sort of immediate payout would be the form of annuitizing a contract. One of our fixed index annuities or a MIGAs immediately after it's issued, which I don't recommend, right? I think there's flexibility that an income rider provides that can still give clients flexibility to their money. If there's anything we've learned over the last few years with how products and markets have changed, is having some flexibility in a product and the ability to turn a feature off like an income rider, like we offer, is not a bad idea. Clients' needs change, and again, the last few years have maybe as a carrier shown us that to be true, especially with the amount of replacement business that's been going on, meaning, clients are in one product, they don't like the performance of it. Now you've got these products out there with competitive rates and stronger income factors. They may want to change, right? So our way to get access to like an immediate payout is in the form of our income rider, and currently for GILICO, that's our only option, if that is answering Tim's question. But our payout factors are relatively competitive, so they may be just as good or maybe even a little better than some other immediate annuities that are out there, with much more added benefit of flexibility and in regards to earning potential, but as well as, if the clients need change, flexibility on choosing how to handle that product moving forward. I hope that answered somewhat of the question.
Yeah, I believe it does, and Tim said he does as well.
Awesome.
I'll make it a little shorter, Tim. There's a big difference between a SPIA and a lifetime income rider, and so the rates and the payouts that the carrier is going to give are different. Also, on an income rider, you can defer income for X amount of years, so that comes into play as well. So there's a lot of other factors involved, but if you have questions, definitely reach out to us. I'm happy to have a conversation and make sure that's answered. One thing I want to talk about, some of you are not what I would say annuity experts. And what I mean by that is you don't write annuities every day in your practice. You're wanting to learn about adding new annuities to your practice and your offerings to your clients. I think a company like GILICO is a perfect opportunity to do that because they have some more simple annuities in their MIGAs, right? Those are very similar to bank CD, other than that they grow tax deferred. So you've got compounding growth. So even the same interest rate on a MIGA to a bank CD, the MIGA is going to outperform the CD. So and then they've got the slightly more intricate fixed index annuities. Again, linked to the market, but as long as your clients follow the rules of the contract, specifically with withdrawals, they aren't going to lose money in that. So some really nice products. So if you're somebody looking to add annuities, don't know where to start, first of all, give us a call, and I'll give you our number in a moment. But also, GILICO may be a good company because they have sort of both the fixed product and then the fixed index product as well that Kurt went over. Again, they do have the agent incentive where you can earn up to 0.5% more currently. Tim, when does that end? Do you know? Or Kurt, sorry. When does the agent incentive end?
Yeah, no worries. And I was about to jump in. So our program, and again, every carrier that has one could run it differently, is an annual program. So really, if we looked at, you have today, May 13th, all the way till December 31st, any issued business in the door qualifies towards that program. Any fixed index annuity business, I should say.
Yep.
FIA business.
All right, perfect. So that gives you plenty of opportunity, even if you're brand new to annuities, to learn a little bit and then offer them to your clients. We are often asked about leads. If you're a health insurance agent, you've got a book of business, even if it's not a massive book of business, and you're looking for ways to grow your business, to make more income to support yourself and or your family, adding annuities is a great way to do that without having to go out and spend hundreds of dollars on leads that we all know lately, in the last few years, haven't returned the results that most of us want. So, I'm going to finish up by, first of all, again, thanking everybody for attending. I know your time is money when you're on a webinar with us. You aren't out putting food on the table, having appointments. So thank you for that. If you have questions, if you'd like to get appointed with GILICO, feel free to call us here at Western Marketing. My name again is Jim Codney. I'm the National Sales Director here. On a day-to-day basis, I manage our life and annuity team. We've got two marketers. We've got Amanda and Tyler Marr. So if you work with either of them, you're welcome to ask for them when you call in. Our number is 800-852-7152. Again, 800-852-7152. And last but not least, Kurt, thanks to you and GILICO for being such good partners. As always, we're looking to continue our relationship to build our production with you, and obviously the fact that you've got really strong products will lend to that. So thank you, Kurt, and thank you, everybody.
Thanks, everyone.
All right. Take care.